Americans to run out of money by October. Is it true? We're going to talk about that and more. Hey, everybody, my name is JJ. You're watching Bull, Boom, Bear, Bust, back with another dose of economic reality. Now, the information I have today is pretty alarming, but not as alarming as some people are making it out to be. First of all, the glasses, they look like sunglasses because they're tinted slightly. These are actually indoor blue blockers. I have to wear this because I've had a little problem with my eyes lately. Turns out I've been staring at screens too long. All the research I do for this channel, looking at a screen. My regular job that I still work, pretty much looking at a screen the whole time. So I had to reduce the glare and get some of these blue blockers. Hopefully it doesn't bother you. If it bothers you, then maybe you thought my eyes were that pretty because you can't see my pretty eyes. I doubt that's the case. I doubt anybody cares. Just thought I'd mention it because a few of you were mentioning it down in the last video. Just wanted to get that out of the way. Let's talk about what people are reporting. Here's a couple reports out here recently. Now, first of all, here's what many on YouTube land were reporting. Clear value tax. He said, Fed predicts Americans will run out of money by October 2023. Richard Fain, the Fed said Americans will run out of money by October 2023. Minority mindset, the Fed, Americans will deplete their savings by this October. So is it really that extreme? Are we really just a couple weeks away from Americans going broke? Well, not exactly. And I respect all these channels, but here's the article that a lot of people were sourcing. And I think some of them that I just read off to you might have been sourcing this article out of Business Insider. The headline reads this: U.S. households are on the brink with excess savings likely to be depleted by the end of the month, per the San Francisco Fed. Here's the key word in this headline: likely to be depleted, excess savings. Excess savings. So not all their money, but the Fed looks at how much money people have saved, how much they'll need for monthly expenses. But then in addition to that, that's called excess savings. So it's the excess savings, not all their savings, but the excess savings, if I can say the word, excess savings, that's going to be depleted likely by October, which is not good. Not as alarming as some had thought or some had been reporting, but still pretty alarming. All right, so let's get into the numbers. In this article here, savings built up by American households during the pandemic are all but gone. And they're talking about, again, excess savings. Data suggests U.S. household savings fell from a record $2.1 trillion in 2021 to about $190 billion as of this last June here, 2023. That by itself is pretty shocking, from 2.1 trillion down to 190 billion. But remember, this is excess savings. But think about that, though. $2.1 trillion in excess savings with all the stimulus. Things were shut down. People didn't travel. People weren't spending money like they were in previous years. People got enhanced unemployment benefits. Businesses got PPP loans. People didn't have to pay the rents, their mortgages. In many states and cities, they shut down utilities. You didn't have to pay a utility bill. Car loans got canceled or paused in some cases. Student loan payments got paused. Wow, a lot of things, right? I'm not sure how many I just named off there, maybe 10. But a lot of things happened to allow people to save up their money, and they just weren't spending, right? So people saved up a lot of money, over $2 trillion. So it's pretty alarming, pretty shocking. And I can see why some people would see these numbers and say, wow, this is shocking. It is shocking. It's alarming to get down to less than $200 billion as of June. Now, just to be fair, Business Insider also was a little bit alarmist in their headline, because if you get down into the article, it clearly says they're talking about excess savings. U.S. households are poised to run out of excess savings accumulated since the pandemic by as early as the end of September, per the Fed San Francisco. So there you go. It actually talks about, in the article, it talks about that it's excess savings, not all of Americans' savings. If it was all of America's savings, that would be very alarming. That means people would be defaulting by the tens of millions on all their loans, massive evictions, foreclosures, if people had all of their savings wiped out. So it's not that bad, but still it's not good, because you went from saving over $2 trillion or having excess savings now to less than 200 billion. I mean, that's a huge drop. That's about a 90% drop in savings in just about 2 years. that is bad, folks. That just shows you how the cost of living crisis is affecting so many people right now. Here's some other information that the Fed out of San Francisco are putting out there. The excess savings was projected to continue falling by a rate of $100 billion per month. Because again, it doesn't mean that all savings will be depleted. Just talking about excess savings here. I think the Fed San Francisco needs to go and maybe go on poop patrol and scoop up some of the poop from the sidewalks in San Francisco, don't you? Just my opinion. Side note. And another source that some of these people may have been referring to or quoting was The Hill. Americans will likely run out of excess pandemic savings by this quarter, per the study. All right, so now we've got that out of the way, and we're all breathing a sigh of relief right now. Deep breath. Everything's fine. No problems. Wrong. There's still big problems. Think about how fast this money was depleted in just a couple years. And think about the cost of living right now, the cost of living crisis that most are going through, the surge in people going homeless. People have student loans they have to repay now, over 40 million people. That's going to be a huge drag on the economy, to say the least, to put it lightly. So things are really bad. Now, there's not really any sign of inflation easing. And if you think that inflation coming down is good, well, no, it's not good. Inflation's still going up. So when they say it's coming down, it's really still going up. You know what I mean? So what they're saying is the rate of inflation is going down, but that just means prices are going up, just not as fast, right? So they're saying, they're twisting the words. The rate of inflation is going down, right? So still not good. We need negative growth numbers in order to have deflation or a cost of living go down. And of course, nobody wants that to happen. I shouldn't say nobody. The powers that be, the leaders, don't want that to happen, because then you get into recession territory. Because once you have 2 consecutive quarters of negative growth, then the R word starts being popped out there, right? So, they don't want that to happen. So they'll do all they can do to keep this going. Now, some people, they still ask me, they say, inflation coming down, that's good, but not really. Think about this. Let's say you have a football team and it's your favorite team and you want them to win. And the first 5 games of the season, they lose by 20 points, 25 points, 30 points, 20 points, 25 points. So they're losing by 20 plus points each game. The next game, they only lose by 15 points. And because of that, everybody's celebrating. Yay, we only lost by 15 points. The first 5 games, we lost by 20 points. Isn't this great? Well, people are looking at these numbers and they're saying things are great. Even investors are going out buying up stocks because of declining inflation numbers. When prices aren't coming down, they're just going up not as fast. Just like the football game, they're still losing just by not as much, but it's still not good news when you really look at it. You're still losing by 15 points. So that's my example for today of this fiasco with the cost of living that a lot of people are thinking are under control. But if you think it's under control, one, why do you believe that? Are you believing what the Fed's telling you? Because they've been saying for 2 years now. First they said it was transitory, then they said it was temporary, then they said it was sticky, and all these different timelines are put out there. But the bottom line is, here we are. Cost of living is actually still going up. And look at the CPI number, how many things are not included in that number. Even home and car insurance, if they would put that in there, that would be a massive push higher in that number. But they exclude a lot of things that most people have to pay just to get by, for everyday person that drives or owns a home. So it's definitely not accurate, right? So we're not out of the woods. We still have some big problems here to get through before things are going to get better. Will it be a crash? Will it be a prolonged downturn and several years of stagflation? Who knows? But, we need to be wise and try to get through this very carefully and plan accordingly. All right. And speaking of the cost of living, let's talk about automobiles. The UAW is on strike. The talks are continuing. It could end any time. They could come to an agreement. But what if it doesn't? Then what if else something happens on top of that? What if something happens between China and Taiwan? There's definitely some things happening between those two countries that could lead to some things getting shut down as far as production of chips, which could lead to more vehicle shortages. Now, some people say there's millions of vehicles, they're just hiding them in excess lots, and that may be true, but that still doesn't make prices come down. If prices are still high, people are going to have a very, very difficult time. What about the people that have to buy a car? Their car breaks down, they have to get something newer, or even a used car, and it simply costs too much, and everything else is costing a lot. So this whole savings situation with Americans, excess savings or just savings in general, the picture is not good at all. If you look at the savings rate, we're still near a 50-year low. It actually went up at the beginning of 2023. I think that was due to tax refunds. But now it's started dropping again over the past 2 months, and we haven't even gotten into the student loan repayment thing yet. And most of these payments are between $350 and $500 a month. Folks, that's a car payment for a lot of people. And just again, a lot of people don't have this extra money. So we're going to see a lot of sparks fly before the end of the year. Sparks are already flying. I don't know why I keep saying we're going to see. Sparks are flying right now. When you look at the numbers, the debt statistics and the data, things are not good. It's just most people don't realize it because it's not being reported, on the headline news, right? But let's get into some other information here. So let's talk about what's going on up in Canada. We got Mr. Justin up there, the leader, saying that they're going to implement a grocery tax because of excess corporate profits. So what's going to happen? Are the grocery stores going to just sit there and pay the extra tax? No, they're going to charge the customers more. I think this is what's going to happen. Let me know what you think down in the comments. They're going to raise the prices on all their products to make up for the higher taxes, and they'll still make the same amount, right? Because now sellers, grocery stores, businesses have the excuse ever since 2020 of, oh, there's shortages. We need to raise our prices. There's shortages. Well, even when the shortages ended and everything got, flowing again as far as the supply chains, prices didn't come down too much, did they? No, because once they found out that people are willing to pay extra without a hesitation, they're just going to swipe their card. Why would they bring their prices down, right? So it doesn't make any sense. So if you're a business, you want to make as much money as possible. Are you going to keep your prices lower than people are willing to pay? Probably not. And if you're a publicly traded company, there might even be some implications against doing that, because you're supposed to maximize profits as a CEO or as a leader of a company, and your shareholders want you to have as much profits as possible. So why would you lower your prices lower than what you have to? If people are still buying things, you would raise your prices as much as possible. If any of you have ever ran a business, let me know where I'm wrong. But I think I'm being pretty accurate in what I'm saying here. Is it good for us as consumers to have to pay these high prices? Of course not. No, everybody wants lower prices, a lower cost of living, lower goods and products and services, lower prices across the board. But if you just look at the business model, businesses have expenses. Businesses have taxes, as we just talked about. They have leases to pay. They have employees to pay. They have insurance to pay. They have health benefits to pay in many cases to pay. So a lot of things to think about there. So you can sit there and blame corporate greed all you want to. Yes, that's part of it. But corporate greed's always been here. It's been definitely increased over the past few years because of everything going on in the world. But corporate greed is definitely not anything new, and I don't think it's going away anytime soon, unless the government comes in and starts putting in some sort of massive price controls on, who knows what. But price controls usually don't fix the problem either. What that does is usually eliminates competition, because all the smaller businesses or the mom and pop landlords, they cannot as easily fit within the confines of price restrictions as easy as some bigger mega companies can do that. So it usually eliminates a lot of the small and mom and pop landlords, but it allows the mega institutions and the multi-million-dollar multinational corporations to gobble up a lot of the competition and gain even more market share. That's the way I see it, and that's what's happened in a lot of countries. If you look at places where price controls had been implemented before. That's what I found out through my research anyways. So let's wrap it up here, folks. So yes, Americans' savings are being depleted. People are running out of money. Also, people rated their retirement accounts like we hadn't seen in decades, as far as people pulling money out of their 401k, out of their retirement accounts. And even with that, we still see savings dropping, right? So everything may look good on the surface. You may look around, you go out, people are still shopping. How many of these people are actually shopping though? Do they have bags in their hand, or are they just out walking around getting exercise, maybe window shopping? Of course, there are still people shopping because you have the famous, um, because you have the trusty plastic cards that can always be swiped. And so far, banks are still able to loan out a lot of money that they actually don't have in reserves. So until that changes, you're likely going to see, things on the surface look pretty normal until something breaks, until something pops off, so to speak. What type of event is going to make this happen? I think we're going to continue to see a big ramp up in social unrest as more people deplete their savings, as more people fall into poverty and fall into desperate situations. More stores getting ransacked and lots of things taken off the shelves. And that's going to make prices go up even more for the people that have to pay for things. So not good, folks. I see a lot more problems down the road, and a lot of problems that we're already seeing get much worse and get much bigger. So what can we do? Well, I am trying not to spend money that I don't have to spend. There's still a lot of people out traveling. People don't have to travel, but sometimes when people don't feel good about their financial situation, instead of saving money and kind of hunkering down, they do just the opposite. They want to do something to get themselves feeling better. So they go spend more money. They go travel. They go on vacations to get their mind off their, stressful lives, so to speak. And a lot of people will do just the opposite of what they really should be doing. And that's why we're going to see a bankruptcy surge here too in the not too distant future. Bankruptcies are already rising. We just haven't seen things get to the crisis point yet. But just wait until gas prices go even higher. We see production cuts out of the OPEC nations now, basically punishing the United States, I think, which they have the right to do. They can choose to cut back on production because the United States, we've chosen to stop producing as much oil. So that was the United States' choice, right? So we can't just sit there and blame other countries when we chose to be in this position by stopping the pipelines, by stopping the pumping of the oil, right? So pretty big mess, folks. What do you think about the predictions out there of Americans running out of money by October? When, if you look at it more deeply, it's just excess savings, big sigh of relief, or are we still in very big trouble? I think you know my thoughts on it. I've spoken enough here today. Like to know what you think down in the comments. Hopefully we'll chat with some of you down there. Thanks everybody for being here. Big love. As always, keep stacking. Bye for now. God bless and peace.